Hi guys, this video is about the accounting system. The objectives of the session will be to understand why financial accounts are kept, think about the different types and the usage of the ledger, learn the reasons for the trial balance, and understand the accounting equation. We'll start with what is accounting. Accounting is where we have the records of a business transaction. So, in summary, what do we do and why do we do it? Well, the what bit is where we keep records of a business and the transactions that it goes through, and we prepare the final accounts so the users of this accounts can understand how and what and why the business has done what they've done and how the cash is generated and what the company's profits and losses are for that particular period. So, in the easy two words, it's recording and reporting. So we will record transactions, whether you want to write them or whether you want to type them in an accounting software, and eventually we'll do a bit of reporting. The why bit is, why do we keep accounts? Because it's useful for the managers of the business. It's also useful for the shareholders, the owners of the business. They want to know how the business has performed. If they've invested money in a company, as the money make them a return on investment. It's important to obtain credit or borrow money. The person who lends us money would be able to assess if we are going to be, or if we're able to pay them the money back. And it's also for statutory requirements. It is now the law that companies must prepare financial statements and have them for public review. And finally, it's important for internal control. If you know what you are doing on a daily basis and what your transactions are, you can use that as a means of organising your system and keeping a good method and process in which the records are kept. So that is accounting. Now we look at the accounting system. How do accountants keep the records of the transactions? There's a large list. It's a step-by-step process. And it starts off with financial documents and works its way down. A financial document is where we have a piece of paper generated as a result of the transaction. The document entries are then entered into the books of prime entry, where we have a book where we initially record the transaction. Then we use double entry to record the transaction using T accounts. From the T accounts, we extract the trial balance to see if the debits and credits are equal. And then from the trial balance, we prepare financial statements using the figures in the trial balance. So that's just a brief summary, discussion of the accounting system. Now let's talk about it in detail. Starting off with financial documents. This is where we have a document which is generated as a result of the transaction. So for example, if you made a sale, then it means you will issue your customer with an invoice. And on that invoice is details of the dates, the number of units purchased, the discounts, the VAT, and the total amount due to you from the customer. So the details of these financial documents are entered into the books of prime entry. Other examples of documents would be credit notes, paying in slips, checks issued, and automated bank payments. These documents contain details of what happened in that particular transaction.
Outsourcing is basically the idea that other companies are going to carry out business processes for us on our behalf, and we're simply going to pay them to do this. So rather than us trying to do everything ourselves, we pay other people to do things instead. Why should we do this? If the business process is not going to help you with your competitive advantage, then it might be just as easy to pay somebody else to do it. That means you don't have to worry about it. And particularly if the business process changes regularly, a good example would be something like payroll, because every year payroll changes as new tax legislation comes into force. If we are doing our own payroll, that means every 12 months we have to change the way we do things. It might be easier just to pay somebody else to do it, and then every 12 months let them worry about it. So tax is a good example. Legal advice, where legal things change regularly, that's another good example. What are the advantages and disadvantages of outsourcing? Well, the advantages, as I've already said, is it allows you to concentrate on the things that will give you a competitive advantage, on your core competencies, and not get distracted by other things which are less important. There is only a certain amount of management time that is available. And the more of that time that is taken up with things that actually aren't that important, the less time there is for the things which are important. So again, just pay somebody else to worry about it. Not only that, but you will know how much you're going to spend in advance, because you will sign a contract with whoever is doing the outsourcing for you, so that you're not going to have any unexpected costs coming in. So advantages of outsourcing, you concentrate on what you're good at, and you know in advance how much you're going to be paying. But obviously there are disadvantages as well. So it is efficient and it's effective, but it isn't always going to be that helpful. Perhaps the biggest problem is if we become locked into an unfavourable contract. In other words, we have to sign something for 5 years, and it turns out the company we've signed the contract with actually isn't that efficient, isn't that effective. Perhaps it turns out we could have done something better ourselves, but now we are stuck and there's nothing that we can do about it. It also potentially means that other people outside our company are going to be doing things that will impact on our customers. So perhaps we have to hand over something which is a core competence as part of our outsourcing, or perhaps what we are outsourcing is part of what we use to deliver a product to a customer. Now, the trouble with that is, if the company that we're outsourcing things to, if they let us down, then that means we let down our customer, and of course it's our fault, or it's going to look like it's our fault. So there are certain times when outsourcing is really helpful, but there are other times when it isn't, and you have to be very, very careful about who you do the outsourcing to. If you outsource to the wrong kind of company, to a company that's going to let you down, that's going to cause you a big problem in the future. So what we need to look for in the exam is, could we actually do things more efficiently if we do it ourselves, or if we pay somebody else to do it? What will our customers think about the fact that we're letting somebody else do something? Is that going to cause us a problem? Is it going to look like we're not very effective? Or perhaps it might be something that our customers don't really care about, and so as long as it gets done by somebody, they don't mind. So in the exam, look for things that we are not very efficient at, that we're not very effective at, and then could those things be done better by somebody else?